Historic day today on Monday, June 15th, as Trump signed a deal with Iran. Markets are euphoric. Everything is up. Stocks, bonds, slightly. Bitcoin and gold. The Dow is up about 600 points intraday as of 2:30 p.m. Eastern time. So that's a record rally intraday. Todd Bubba Horwitz is back with us to break down what's going on. He's a founder of BubbaTrading.com. Should we be selling after the news broke out, or should we be buying more into this rally? Todd's going to break it down for us, and we're going to find out what his answer is. This video is sponsored by Kalshi, the largest prediction market in the United States. Unlike a sports book, you're trading peer-to-peer on real-world events. Anything from political outcomes to economic data, and the price moves based on public opinion, not a house. Go to the link in the description down below or scan the QR code here to get started. New users who use my code LIN, L-I-N, can get $10 when you trade $10. Right now, traders are predicting that there's a 40% chance that U.S. gas prices will get above $4.60 by the end of the year. Now, that's a trade we're actually going to be talking about with Bubba, so stay tuned for his answer. If you place $50 on this trade, you could potentially earn $117 on this particular trade if you turned out to be correct. Stay tuned for Bubba's answer on gasoline and oil. He was previously short on oil. That turned out to be correct as of a couple weeks ago. Is he still short now? We'll find out. Todd, welcome back to the show. Good to see you again. We have a very exciting episode up ahead.
Always great to be with you. It's a pleasure, and I look forward to our conversation today.
Everything's up on Monday, June 15th. The S&P is up about 1.5%. NASDAQ is soaring, up 3%. I guess buoyed by the SpaceX IPO, but we'll talk about that in just a minute. Bitcoin's up 5%. Gold's up 2.5%. It's just a good day for investors who have stayed long. You're staying long on the stock market indices, but you're still waiting for an opportunity to short. Why?
Yeah, I mean, I am staying long. As I tell you, I always am going to be long and always going to be hedged. But listen, there's a lot of issues out there, David. You look at the credit card debt, over 13% of the people are 90 days past due on their credit card bills. 6% of the population is defaulting on their car loans, and 4% are defaulting on their mortgage. And we've only just begun. We have no real excitement, and we're losing jobs at record numbers. Yes, you can look at that ridiculous jobs number they put out a couple of weeks ago, but at the end of the day, if you look at jobs to the population, it is ridiculous. And if you want to look at the U6, true unemployment is about 8.5%. So we're losing more jobs every day. It cannot bode well for the market. The K-shaped economy, the top end of the K keeps getting smaller, which leads me to believe that it may not be tomorrow, it may not be the next day. I mean, certainly the settlement in Iran has buoyed these markets and collapsed crude, which is what we would have expected. Let's see how they trade the next couple of days. It is a shortened holiday week, so that will make things a little interesting with the holiday on Friday. But overall, I'm looking for a place to sell into this market and actually take a short position as a trader.
Which assets are you most looking forward to shorting or watching to short, potentially?
Well, I'm already short crude, and I will look to cover that, but not for a while. I'm looking to short the NASDAQ. I'm looking to short the S&P. I think that they're going to be higher 10 years from now, but there's points in time throughout a given year that we have 5 to 6 to 7 to 10% sell-offs. And I think we're due for one of those. We saw the first look at that about 10 days ago on a Friday when the NASDAQ was down 6%. And again, we got this bounce, and let's see how it plays once the news is run through the market. Remember, we're trading on extremely thin volumes right now. We're going to be about half of our normal daily volume. Now, one of the big things you have this week is the triple witching cycle for expiration. So that always throws a little bit of a monkey wrench into some of the trading. I don't know that we'll see or expect a major sell this week. You've got the Fed meeting on Wednesday, which will be Warsh's first meeting. We know they're going to hike rates at some point this year. At least they're pricing in at a 60% rate, a price hike. There has been no more talk about rate cuts for now. And of course, that ties into inflation and everything else. But the real big problem is, we just go back to, there's nobody working. I mean, you got, chains closing, you've got restaurants closing, you've got sporting goods stores storing, and the small business guy is struggling. So it does not bode real well for the longer term economy right here.
Why are you short oil still at these levels? You were short, or at least you maintained a bearish position at $90. We talked when it was near $100, but it's come down since.
Well, I've been short since I've been short since 110 and 115, and I will continue to stay short because we have an overwhelming glut of oil in this country. Okay. Now that they have oil flowing again, that'll even build a bigger glut for what we have here. I think you have a weaker economy. I think you have a lot of other issues that are going into it. Now, again, I'm not going to be stubborn and say, but right now I would not cover my oil, okay, until it got back, like, let's say 85. I'm willing to take that risk that because I think before the year's over, we're going to see oil back in the 60s. And I think that that's a pretty simple, easy path to get there. You look at the overwhelming supply, you look at the lack of demand, you look at the overall economy. To me, that says oil has a lot of room to go to the downside.
Which downside are you looking for? I mean, are you a technician in that sense? Do you look for a specific level, or do you just kind of wait for momentum in either particular direction to wane?
Well, I mean, from a technical standpoint, oil looks horrible. Okay, now you are getting a little bit of a blow off bottom here, which would indicate you might see a little bit of a bounce. I'm willing to live through the little bit of a bounce. I'm willing to take my chances because let's look at oil from when the Iran war first started. We had oil spike to 120. Then there was a little bit of a peace deal. Oil got down to 110, rallied a little bit. But subsequently, every time out of the 39 times that we've had a deal with Iran, each time oil has made a lower high and a lower low during that cycle. I don't think that's going to change right now. I think we can continue to look for lower prices and still look, if you're not involved now, look for rallies to sell into the oil market. And I would think my next target to be a seller would be around $85. Now we're going to have rollover again. So if you look at the formation of oil in December is trading in the low 70s already. Okay. So again, right now, July oil is trading at $80 right now. August oil is trading at 79. So I would look if August oil, which will be coming on board in the next 5 days, if that gets to $85, I'd be a seller of August oil at $85.
What happens when the S&P 500 reaches 8,000 points? Let's say we're at 75, 70 right now. If it goes higher still, which a lot of traders online are predicting that it might be, and we'll get to that in a minute, but 8,000 points, what would you do?
Well, I mean, I'll be a seller long before 8,000, depending on how it gets there. Again, there's a lot you have to look at when you're trading in a market as a trader, and it will depend on the speed and how it gets there. If it goes to 8,000, let's say in the next 5 days, I'd be an automatic seller. I wouldn't even think about it. It would be just too fast, too parabolic. Those ranges can't last. But certainly the S&P at some point will trade 8,000. I don't think it'll be this year, but it certainly could happen. I wouldn't say that it couldn't happen. A lot of trading is how fast and what kind of action is driving the market there. Is it what they call the FOMO trade driving it to 8,000? Is it the Robin Hood traders trying to chase it up as they did with GameStop and other stocks? That would be a market that I would sell into. If it is a slow, dull grind, then I would have to be much more careful and I would be much more patient and wait for that to get there. So the faster it goes up, the more likely I am going to be an aggressive seller. If it continues to be dull and grind higher, yes, today we're higher, but if you go back and look to where we were overnight, the initial gap, we've been very slow since the initial gap we had overnight. And if this continues, then there's no reason to get involved because there's really nothing to trade right now. Is it just, as they say, dull markets grind higher?
Do you think that the fact that gold, which was one of the outperformers last year in 2025, is thus far lagging the S&P 500 in the last couple of weeks, is that signaling something to you, Todd?
No, I think gold did exactly what I'm talking about in crude oil, and exactly what I'm expecting to happen in the S&P. It got up too far, too fast. If you look at that chart back when it hit 5,500, just like when silver hit 120, it was too parabolically moving. And now you're paying the penalty or the price. But we've now, I believe, put the bottoms in gold. I think the 4,100, and then subsequently we traded down to 40.65 or 40.56 last week. I think that's the low. I think gold will now go beyond its rave back higher again. And it would not surprise me at all if gold got back to 5,500, even an outside shot at 6,000 before the year's over.
What are you most bullish on now then?
I'm most bullish on the metals, believe it or not, gold and silver. I think that they have made their bottoms. I think, listen, if you look at silver took a 50% haircut from its highs. I'm still very bullish on platinum. I'd like to be bullish on the commodity space, the soft commodities, but they're really struggling. I mean, the grain markets have really struggled. I was bullish last time. They were okay, but they have not really performed. But that goes a lot into the overall high inflation, and it's hard to keep pace with everything. But if you ask for my number one and number two trades, would be gold and silver.
Well, okay, so what's happening right now in the market is very dependent on what's happening with Iran. And if we take a look at news like this, for example, Dow jumped 700 points today, record rally, gaining steam after Trump signs Iran deal memorandum. Now, he's been talking about a deal. It's finally apparently been signed. We'll see how long it lasts because previous ceasefires have been broken almost immediately. So I think markets very enthusiastic about the prospect. Let's see if it holds. How would you trade this particular piece of news?
Well, I mean, again, I'm looking more to sell into this rally that we have here, even though the action is bullish. But again, it's so slow. The volume is so light that it is hard to want to get involved. You have to be very particular from a trading aspect. Okay. Dull markets, again, they grind higher. There is not enough action to take them to the downside. There's not enough seller participation right now. So you have the natural, which is why markets in general are predisposed to go higher because of IRAs, 401ks, pension funds. If we got a little bit of a spike in volume, I would definitely be a seller. I am not a new buyer here with new money. I am sitting on the sidelines at the moment from a trading standpoint, waiting for an opportunity to sell into this market. But again, as long as it continues to be slow and volume is light, and we've got this triple witching cycle, which kind of queers off the volume a little bit because it's being split between two contracts, I'm going to be patient and wait. But my lean and my definite next trade will be to the sell side.
Because a deal has been reached, as a trader, do you look at this and say, this is an opportunity to go long because now things are going to go risk on, I'm going to follow the herd? Or do you look at this and say, well, it's time to probably start taking profits because the herd is going long. Therefore, if you want to call yourself a contrarian, it might be the right play to start picking at profits once people have their fill of the gains this week.
I think if you're a trader, you're definitely taking profits here. And if you're not, I think you're making a mistake. Investors, see, I'm a believer that investors should always stay in. Okay. Because again, if you miss the 10 biggest days over the last 40 years, you made 50% less money than you would have made if you'd have been in the entire time. But from a trader standpoint, you got to take profits here. I think, look, can they go higher? Of course they can go higher. Listen, the NASDAQ is up 900 as we're speaking right now. It could be up 1,500 before the day's over. But at some point, you have to draw the line. You have to become more robotic from a trading standpoint and say, I've reached my profit target. Either I'm going to put a tight stop in and make sure I lock up those profits, or I'm going to take the profit and move on to the next trade. Because I think moves like this are unusual. Now, again, remember, it's only 3%, so it's not like it's unbelievable. I mean, the Dow is only up 1.5%. So it's not like we're having these giant moves. If you always convert back down, $100 stock, if it moved $1.50, would you be shocked? The answer is absolutely not. So it's not that big a deal. But if you've got nice profits, I think the odds favor a market going to sell off. And I'm not talking about a major sell off, the one I'm really looking for, but odds favor that there'll be a pullback, whether we're going higher or not. There'll be a 2 to 3 to 4 to 5% pullback that will give you an opportunity to re-enter if you decide to take your profits now and want to re-enter later at a later date.
All right. Well, this is something that the average American needs to, or is curious about. How high will U.S. gas prices get this year? Going back to your lower energy call, this directly ties into the conversation we're having about Iran. If the Iran deal is maintained, and I guess peace is maintained going forward, and the Strait of Hormuz stays open, in theory, we should get lower gas prices. Right now, traders and Kalshi, largest prediction market in the U.S., are predicting above $4.60, 41%. Yeah, It's not immediately clear where it's going to land. Well, how would you answer this question? How would you approach this kind
I
of
would
question?
say, I would say that we have seen the highs at the pump for buyers, for consumers. I would say that we will not see those ridiculous high price. You had a panic in the beginning. You had a gigantic move in oil, and we've seen, as we've talked about, subsequently every rally in crude has made a lower high. I do not see gasoline at the pump going much higher. I would say that 460, I don't know what the national average is. I know in some places in California it got over $8. Okay, because unfortunately, one of the problems with gasoline is there's a lot of federal tax and a lot of state tax in a lot of states. But from a pure standpoint, I do not think that price, I think the prices at the pump, we've seen the highs for the year and they will only come down lower. That's what I would think.
Would you bet on the fact that the Strait of Hormuz, I guess, goes back to being closed? Is that, if you have to walk through as a trader, the probabilities here.
This deal fails, David. There's no doubt in my mind that there's an issue, something goes on, and there's another problem in the Straits. But again, we are our own producers here, and we are sitting on a glut of oil. There are empty tankers coming to the United States to get oil. Canada the same way. They've got an overwhelming supply of oil. So we should have never been at these high prices to begin with. When you look at it, and if I think we talked about, you and I, about wait for the earnings to come out of these oil companies. Now, since we've last talked, the only one to report so far was Shell, who had record profits by double throughout this whole thing. So that tells you that it's not going to really matter anymore. We saw the panic. We saw the fear. Yes, could oil pop up again to 85 or 90? Of course it can. But do I see it going back up into the hundreds right now based on the Straits of Hormuz? No, I don't. I think that fear is gone. And I think that is done because I think if this deal fails, then we'll get back to normal pricing anyways.
Tell us about the trading methodology that you've employed over the years. What has worked for you and what hasn't? Right now, you've got a system, you've got an algorithm in place, you're long the index, and you're looking for opportunities to short. This is something that you've developed. How has it come to this point for you?
Well, I think first thing that every person who wants to get involved, you have to decide, are you investing or are you trading? Because they are two completely separate animals. So when I'm investing, I'm using options derivatives just to hedge my portfolio and leave it on. I don't sell it. I never sell anything. Okay. I stay hedged. I continue to add and I continue to buy using my hedge. From a trader standpoint, one of the methods that I use that I think is the easiest for anybody to learn is if you use the Bollinger Bands and you set them to, instead of the standard rate of 2 standard deviations, you put them at 3 standard deviations. Any move that has gone typically 3 standard deviations up or down has about a 90% probability of having some retracement back. So if you want to be an active trader, you set up something like that. But what you're really trying to do is you're trying to pick on other traders, whether they be panicking and selling into the hole and the markets are going down too fast, which happens all the time, or they're chasing them up through FOMO. And anytime you get 3 standard deviations from the mean, whether it be on the downside or the upside, you have about a 90% probability to make some money on that trade.
You've also been experienced at the casino. Tell us about the differences in mentality between being at the casino versus being in front of a computer trading indices.
Well, if you're talking about poker casino, which is the game I have an edge in,
yeah,
it's the same trade, right? You have to wait. You have to wait and you have to make your plays when the opportunities arise, and you have to maximize your profits when you have them, and you have to minimize the losses. And that is the same from trading or poker. Okay. You have to be patient enough to wait for the trades. I mean, listen, we've been open. I've been trading since 1:30 in the morning Pacific time. I've made about 6 trades today, and normally I would make 600 trades in a day. So that shows you how little action is. It shows you how patient that you have to be in a market, okay, as you do have to be in a poker player in the casino. Other casino games, you have to work on the mathematical edge and be a card counter, but that's something different. The direct correlation, poker to trading, are the same. You have to be very patient. You have to maximize your gains when you make them, and you cannot make too many stupid or drastic mistakes. I'll make a stupid mistake. I don't, in both, I've made stupid mistakes, and I still do occasionally. But it is your objective to always be worried in managing the risk and worried about when you get the right trade on, letting the profits run as far as you can. Very much is what I'm doing in crude oil right now.
Okay. Why did you say earlier you wouldn't get in on the SpaceX IPO? Let's just take that, what you just said, that trading philosophy, and apply it to this particular chart. This beat a lot of people's expectations. A lot of FUD right before the IPO hit. People were talking about how overvalued the stock is and how it immediately crashed. We don't know how it's going to trade 6 months. Maybe it will still crash in the next 6 weeks. I can't tell the future. All I can tell you is that it's up about 30%, 22%, 21%, depending on the time of the day, since it IPO'd.
Well, it IPO'd Friday at 135. That was the price, but it actually opened at 150. Okay, so now it's 182. I don't like the trade in the IPO space. There's not necessarily enough liquidity. They move too fast to get involved with. You really can't, if you're going to trade in the IPO space, which is fine, it's a hard market to set a stop in because the swings are so volatile and so big. Now, tomorrow in SpaceX, they're going to open up the option market for SpaceX, which may pique my interest to look at the option market there. But, a brand new issue, I have no interest, especially when it spikes straight up. You've got everybody chasing it up. If I were going to do anything with SpaceX, and I am not, but if I were, I'd be looking for a spot to get short this. And not because I'm negative SpaceX, not because I don't think it can go higher, but I think, as always, and as usually happens, is that the traders have gotten a little bit too exuberant and they've pushed it up. I mean, we've gone straight up on that IPO, basically in a straight line from 148 to 185, straight up with basically no pause. To me, that's a sell. I am not going to sell it because, again, I don't want to figure out how far away I'm going to have to put a stop in, because this wouldn't be a normal stop where it would be $2 or $3 away. This thing moves in $2 and $3 increments. So I'm going to sit back and wait, but certainly just based on the pattern, it has not, remember, my trades have nothing to do with the company themselves. They have everything to do with the way they trade and the way they get to certain points. And when you look at a chart, you put that SpaceX up on a daily chart, you've got 2 straight up days going perpendicular. Okay, and that cannot last. There has to be at some point here a pullback. The question is, where does that pullback come from?
Generally speaking, when something is very much hyped, very much talked about in the press, and very much talked about in the public sphere, I'm not talking about SpaceX in particular, I'm talking about anything that could be applied here to this logic. I was at a Chinese restaurant a couple days ago, right before the SpaceX IPO happened, and people at the table next to me were asking themselves, should we buy the SpaceX IPO? I've had people that I've known for 20 years who have nothing to do with finance, and this is a mother with 2 kids texting me, hey, you're in the finance space. I'm not, I'm a podcaster, but hey, you're in the finance space. What would you do? Would you buy the SpaceX IPO? I said, I don't know. Watch my show. My experts would know. My point is, when something like this happens, when everybody and the cousins you know and your grandma's friends that you know are asking you about a particular trade, what is your thought process here? Because clearly, if you had expected this to fall the other way, you would have been wrong.
There's your answer, okay? When everybody wants to know and everybody wants to participate, that means that is a screaming sell signal, okay, at some point. I don't know that point yet. I haven't seen enough, but I will take you back to when Beyond Meats came out, was very excited, and Beyond Meats traded up to over $300 a share, now worthless. I'll take you back to Tilray. The pot stock traded to $300 a share. It's now zero. So and don't get me wrong, SpaceX is going to be fine. Okay, they're going to be a good company, but you get too much excitement. It's the old story. Before the internet, traders like us used to use when something would hit the headlines and it would be so exciting in the headlines, that would mean to us that the highs or the tops were in, or were the lows, depending on which side of the market we're on. To me, SpaceX is a sale here, has nothing to do with the company. It has only to do with how much action has been all to the buy side. And you can see that today's volume in SpaceX is about a third of what Friday's was. And I don't think it's going to catch Friday's volume today, which would mean, to me, the buyers are exhausting themselves, and you will probably see SpaceX trade in the 170s, 160s before the week's over.
Let's apply that to the commodity space. At any point for gold's chart, did you have the same thought as exactly what you just talked about right now with SpaceX? Let's just go back earlier last year to earlier this year. Was any point of this chart reminiscent of what you're talking about when it comes to SpaceX? This is
right there, that big single stick sticking straight up in the air, up about another, to your right, about 10 bars.
Yeah. Okay. This year.
Right there. That was
January 19th.
That was a sign. That is exactly, if you look at silver's got the same exact chart as that. Okay. We came down. You see, we perked down about 2 weeks ago to 4,100. Friday, we hit 40.56 and then ended up rallying on the day. We are higher today by 110 or 115. I think that gold is seen and has put the bottoms in. How fast we go back up, I hope it doesn't go up too fast. I hope it goes up slowly and grinds higher as it was doing before it spiked higher, because I think now we want to start to draw some new money in. And I think that you continue to see this rally. But this is exactly what I'm talking about. When you look at silver, if you put a silver chart up for me, because you're going to see it even more accentuated.
Let's do it. Okay, let me click on this.
No problem.
Silver, yep, all right.
See that?
Yeah.
Okay. That's what I'm talking about. That's what SpaceX looks like. Look, I'm not saying it's going to have the same result tomorrow, but you cannot continue when you see these parabolic moves that are going straight up, especially in a commodity. Stock's a little bit different because on the way down, they can go to zero, versus commodities aren't going to zero. But on the way up, at some point, and you saw that massive pullback, okay, in silver, which cut the price by 50%. And again, I'm not saying SpaceX will be cut 50%. I'm saying that it wouldn't surprise me if it traded 155 to 165 before this week is over.
Commonly seen mistakes that you've observed when it comes to trading. What are people doing that you wish you could just shake their head and say, stop doing that?
Well, I'll give you a story. When I used to hire clerks that used to work for me, and obviously nobody wanted to be a clerk for life. They wanted to be a clerk because they wanted me to teach them how to trade, and then they wanted me to back them.
Yeah.
And anybody who ever says that the market is wrong, they immediately got fired. And for people out there who think the market is wrong, the market is never wrong. The market is absolute. Okay, it's a machine. It never gets sick. It never gets tired. Your own worst enemy is the person you look in the mirror every morning. The psychology that it takes to trade, because it can be depressing. It can be a lonely life once in a while when things aren't going well. It is the ability for you to pull out of that funk. And sometimes you just got to walk away, David. You say, hey, it's not going my way right now. I'm not seeing the market right. I'm going to walk away. But included in all that, people have to have a plan and a decision. No decision. Every trade you make, you should know your exit and your loss potential once that trade goes on, and know what you're trying to accomplish without just saying, hey, I'm going to buy SpaceX because it's a new hot thing.
When someone says to you, the market is wrong, what are they trying to get at? What does that mean?
They're trying to say that they're smarter than the market. And because, I can give you all the reasons in the world why we should be down, the economy, the jobs, the whole thing. But yet I tell you every week or every time we talk, the markets are higher. I'm not getting in the way of this right now. I have no reason to sell right now because it's not giving me a reason to sell. Do I think we're overvalued here? Yeah, I do. But we haven't done the things that I want to see before I would short the market. The market is never wrong because it's driven by buyers and sellers in which they make price discovery. Okay, that's where the exchange of wealth takes place at price discovery, and that's what the price is. So whatever this price they're discovering right now, that's the current price. So when the markets goes up today, and people say, "Well, the economy is bad. This is bad. It shouldn't be up." Well, guess what? If you were short, you got killed and you lost all your money. So go home. And if you stayed out because you were a little concerned and you were smart enough not to put yourself in front of the freight train, then you were fine because you did nothing, waiting for an opportunity for you to get yourself in the position you want to be in later.
Final question. So you're currently long in this market. I'll give you one potential reason to go short because you say you'll probably sell before 8,000 points. What if the next Fed chair, Kevin Warsh, who's going to take the podium at the FOMC for the first time this week. So we'll watch closely what he says and does. What if the Fed starts pivoting downward? In other words, they start hiking rates this year.
Well, they're already pricing in a hike. There's a 60% chance there's a hike this year. And Warsh, believe it or not, Warsh is more of a hawk than he is a dove. Okay, so the markets already know that as well. We've seen interest rates on the rise. So I don't think that I think that as typically comes out of these Fed meetings, especially when Jerome Powell was the Fed chair, was he stepped on his thing too many times in his speech. I think the more important people, not what their decision is and not what their forward look is, but how Warsh handles the speech. Okay. And if he makes it clear that there are concerns about inflation and that they're going to have to start to hike rates and maybe accelerate the rate hike, you could see a pretty significant sell-off. But if he comes off gentle and smooth and confident and says, look, we're going to have at least one rate hike before the year's out, everybody already knows that. It's already priced into the market. I think the markets continue to stay where they are.
Would the higher bond yields worry you? Does that not put additional pressure on companies and their interest expenses? Does it not put pressure on consumers and their interest expenses, basically putting pressure on the entire economy and the S&P 500?
Well, therein lies the issue. See, I think the 10-year notes are going to 6% before the year's over. Okay, so again, I think interest rates are going a lot higher. I think we're in trouble in a lot of different ways. I'll give you one more quick example. I know we're running short on time, but I'll give you one more example. In Vegas, at least, new homes, they're giving you new homes with no money down. Okay, what does that tell you? That is not a good thing for the overall economy. That is telling you that they are stuck with too many houses and they want to get somebody else on the hook for the house because they've built too many houses. So they're willing to give you a no money down loan. There are some places that are giving no doc loans again. This is a repeat of what happened in '08. Now, I'm not saying that the same result's going to happen tomorrow or in this week or this soon, but you can see the problems of what we're seeing by the extension in car loans, mortgages, the entire thing. And I think interest rates are going a lot higher, which will affect the balance sheet of a lot of these companies.
Okay. And when interest rates hit 6%, final question, what happens?
Well, I think when we get to 6%, I think you see the S&P down at probably about 5,500.
Yeah.
Okay. I think we get the sell-off that I've been looking for a while. And I think it's coming sooner than we think. But please, don't anybody go out and start selling the market. You have to have a reason to get short. I have no reason to get short right now. I'm watching it as you and I are talking. I have no reason to get short this market right now. Yes, I would like to get shorted, but I have no reason. There's not enough action in this market to sell it. So I will stay long my portfolio. My investments are long, so I'm benefiting from that. From a trading standpoint, I'm sitting here, I'm talking to you. Fortunately, I got you to talk to today.
Okay. Well, fortunately, we have you to educate us on what's going on. And it takes a tremendous amount of discipline to stay long, even when your thesis is short. So I think some people don't understand that, Bubba, and they watch you and others, and they say, why is Bubba still long when he thinks interest rates are going much higher and the S&P is coming down eventually? They don't. What's the logic here?
I'm going to give them the reason why. I don't know if I have time for this, but
yeah, please.
The stock market in history has gone up 8.5% year over year. Okay, since 1950, it's gone up 10% year over year. If you buy good companies, no matter what happens in between, there are going to be opportunities, and you're going to make money. And as I mentioned earlier, if you had missed the 10 best days over the last 40 years, okay, you would have made half as much money as you should have made if you had just stayed in the market. If you missed the 20 best days of the last 40 years, you would have made a third of what you had made if you had just stayed in the market. Look, I'm a hedger. I teach hedging. It's one of my products. But I tell everybody that at worst, just stay in the market. Don't look at every move. And now, I'm not talking about buying crap stocks that don't make any money and these little penny stocks. I'm talking about if you're buying the pure stuff that you know is going to be in business, you'll make money. And no matter what happens between now and the end of this year, whether we're up or down, I'll be long. And when we get that big sell-off, all I'm going to do is buy more, okay, and accumulate more, because I'm going to continue to play that statistic of 8.5% year over year in history that the markets go up, and I'm going to continue to buy good companies and continue to benefit from that and build wealth that way.
Yeah, perfect. Bubba, where can we learn more from you?
You can go to go.bubbatrading.com. We had a little problem. We have a new website, go.bubbatrading.com. And as I like to do for your people, David, if they'd like to read my 2 options books I've written, I'll be happy to send them the PDF file. All they have to do is email me at bubba@bubbatrading.com, and they're more than happy to send them the book.
All right. We'll put the link down below, so please do follow Bubba Trading and message Bubba if you want to read his books. Thank you so much.
David, thanks so much, brother. I appreciate you.
And thanks for watching. Don't forget to like and subscribe. And don't forget to use my code LIN, L-I-N, when you sign up to Kalshi. Remember, new users who use my code LIN, L-I-N, can get $10 when you sign up and deposit and start trading with $10. Link down below or scan the QR code to get started.